Welcome to Gaming Fin, your channel for everything related to the gaming industry and the financial markets. And I'm so happy again that I can upload a video. So guys, I'm just coming home from my holidays. It was very sunny, it was great. And hey, I've seen all the news about Embracer and last week, and I want to talk about Embracer stock, the Swedish gaming conglomerate, in this video. So we're going to cover the chart and how the development was in the last week in the first part of this video. Then in the second part of this video we are going to jump directly into the Embracer Group interim report. We're going to watch this video, the part where CEO Lars Wingefors, who seems to be much more happy now, is talking. We're going to comment this as well, and then we're watching also the presentation together in this video. So stay tuned if you're interested in the in-depth presentation, then please stay with me. So also, if we are checking now the chart, you can see that in the 17th of August we were even jumping up 20% at one point, and now we're still like 12% up. So the last 5 days, when the report came out with the numbers that were less bad than people expected. So we saw that we're jumping nicely up, but here we see we are still like in the let's say the 30 Swedish krone domain here, and you can see that we are fighting now. I was drawing just some lines, so that's technical analysis, so that's chart analysis. So there are people that like it and people don't like it, but I think it's always very helpful, especially if you look, for example, at the 23, 24 Swedish crown. So there is a strong support also in 2018, and of course if we fall under this, then we see the 16 Swedish crowns again, but here I would say we're going to accelerate now between the 23 and maybe if we manage it to go over the 30, if we manage it to go over also the Fibonacci retracement at 38, then of course we can see way better results in the stock. So, but stock has been diluted. Big investors are selling obviously the stock, and they have sold the stock also massively after the last report. So I'm also here at this point. So guys, I'm already have quite a position in Embracer, and if you were following my update videos on my real portfolio, then you see I'm still massively down with Embracer stock, and I'm at this point now also after the report. This is no financial advice, of course, you make your own research. I think like if we're going back to the 23 to the 23 Swedish crowns, I'm going to average down a little bit more. I think we have to test this, and I would actually be happy if we test it here. So I don't think it would be so wise now if the stock now massively going up now to the 38, 40 Swedish crown. So I don't think this is going to happen. So I think we see some testing here, but hey, take your time, do your research, and therefore you're here because you want to know more about this stock. All right, guys. So PE ratio here on Google on Google Finance now is around about 7. That's extremely low. And also here, check out on Games Industry Biz. I don't have any affiliation with them. I just like reading them, and therefore I like to recommend this this online portal. So Embracer, talking about this because I think they make very good news, and they write it in a very good way. So here always Jeffrey Rousseau, he writes very well. So Embracer Group net sales rise by 47% in the first quarter, and here we are making good progress on the restructuring program. This is what everyone wanted to know. Then we had the scoop. Saudi funded Savvy Games was the mystery partner in the collapsed $2 billion Embracer deal here on on Axios. Also, I'm putting you this link down below in the description. So check out this article. It's very interesting. So, I mean, is it a scoop? Is it a rumor? I don't want to comment this because I don't want to play with those rumors. So if this is not clear now, for me, I cannot really work with this information. Therefore, I'm putting this aside. Of course, I keep it in the back of my head, but I don't think it's a big deal now, or whether it was the Savvy Games fund or it was someone else. So Embracer on Collapse 2 billion deal. We have put this behind us, and I take it here also with the CEO, with Lars, and I think he's taking here the right steps. Also, he's not commenting this. So check out those articles. I'm putting all of links to those articles in the description of this video. Guys, so not the financial advisor, retail investor, YouTuber. This is for information and entertainment purpose only, so it's always important to bring up this little disclaimer. So here we see that's actually their title. So, and now we're going to jump directly in the presentation. So I think it's a pretty good presentation, and I'm happy to see that Lars is also in a way better mood. So all right, so let's start here.
A great Stockholm this morning. So let's go straight into the brief summary of the quarter. I'm pleased to announce a net sales of 10.5 billion, which is a growth of 47% year over year, or an organic growth of 20%, driven by solid performance of Dead Island 2. Our profitability with adjusted EBIT came in at...
Just to comment this very quickly, the organic growth is something that is, in my opinion, it's very important for a company like Embracer Group, a company that was growing by acquisitions. This company needs to continue growth in an organic way. So, okay, let's continue.
At 1.7 billion, representing a notable improvement sequentially. The Q1 result is also ahead of management expectations for the quarter. The positive sequential margin development in the quarter is a result of how we deliver on our games pipeline. Our Q1 execution builds a strong foundation to further improve the margin during the year after challenging fiscal 22-23. The free cash flow of minus 600 million in Q1
yes,
is largely in line with the plan for the year, given the continued imbalance between investments of completed PC games, game development, which in the quarter we invested 1.7 billion into the pipeline, but the completion, the value of the game completed, including Dead Island, was only 800 million. The adjusted earnings per share increased 4% year over year. So now looking again into the operational performance, we had Dead Island 2 and Remnant 2 that jumpstart the year. In recent months, those titles has been selling very well. Dead Island 2 reached a sell-through of over 2 million units in the first month. Released early in second quarter, in this quarter, current quarter, Remnant 2 sold over 1 million units in the first 4 days and has continued to sell very well post this period. Developing and publishing great games is our core business. And I would like to
also just a comment here. So you see that Dead Island 2 and Remnant 2 were very important for Embracer now for this report. And now you have to ask yourself, are we going to have other games that can live up with this? Is it Payday 3 by Starbreeze? Is it going to be Space Marine? I think where also Focus Entertainment is involved. are those games, can they also deliver? So, and then of course they have still they say over 250 games in the pipeline, from which are only around 60 games are known. So also it's, in my opinion, it's very important to have quality and not only quantity in the future for Embracer.
To highlight the great achievement of the teams behind the recent successes of Dead Island 2, which is PlayOn Publishing and Dambuster Studios, Jagged Alliance 3 with THQ Nordic Publishing and Hemimont Games as a developer, and Remnant 2 with Gearbox Publishing in San Francisco and Gunfire Games. Looking for the year, we reiterate our adjusted EBIT forecast of 7 to 9 billion for the year. Based on the performance year to date, we have an increased confidence in our forecast range. We also make,
which was then obviously the reason, the forecast is obviously the reason why the stock was jumping so much.
Making good progress on the restructuring program announced on June 13, with the ultimate goal of significantly improve free cash flow and reaching a net debt of 8 billion by year end. Delivery of the program will allow us to operate with increased efficiency across the group and reduce business risk. This in turn will enable us to continue grow and to deliver a high quality products in the long term. At the same time, we acknowledge the uncertainty that such a program can cause for our colleagues. A painful consequence of the program is that a number of talented and passionate team members have left us or will be leaving us before the end of the fiscal year.
So this is also a very important point. So the restructuring program means they are also closing down one or another studio, or one studio they closed down already for sure, and some other studios get slimmer, so less people. But I mean, let's face it as well. There are always efficiency gains here. A lot of companies are doing this, and this is also related to their plan actually to reduce overall their debt.
With us today, we have Müge, CFO of Asmodee and one of the key workstream leaders in the restructuring program. She will provide an update on the program towards the end of this presentation. Now, looking ahead, we have several large budget games expected in this fiscal year, including Payday 3 and Warhammer 40,000 Space Marines 2. We have also several other exciting titles such as South Park, Snow Day, Homeworld 3, Hot Wheels Unleashed 2, Teardowns on console, Alone in the Dark, and the new Outcast, A New Beginning. This makes us confident in growth for the remainder of the year in the PC console game segment. Looking beyond that, based on the restructuring program outlined in June, we expect to deliver a positive organic growth combined with a lower CapEx run rate and a more efficient cost structure. We have for several years made strategic investments into accelerated long-term organic growth in PC console games. Ongoing investments into the future game releases has outpaced completed development by a factor of 2 to 3. Increasing the value of ongoing game development to more than 10 billion by end of June. Although we now reduce CapEx and prioritize within our portfolio, completed development should continue to increase as our development pipeline matures.
CapEx is capital expenditure, so the money they spent.
Supporting the growth outlook. After the program is completed, more focused investments into our highest return of investment titles should drive both growth and profitability.
Very good point. So more focused investment in those titles that have a good ROE as a return of invest.
So let's look at the segments. To start, adjusted EBIT increased by 27% and amounted to 1.7 billion versus 1.3 billion in the quarter, yielding a 16% margin. The increase is mainly driven by PC games console segment and entertainment and services segment, which had a strong organic growth and a strong margin in the quarter. Also, the mobile game segment performed strongly from a profitability perspective, while tabletop games had a seasonally softer quarter in line with management expectations. Looking in the PC console games segment, sales grew 38% organically in Q1. Revenue from new releases amounted to 1.6 billion in the quarter, an increase of 341% year-over-year. The main revenue driver among new releases in the quarter was Dead Island 2. Other notable new releases in the quarter was All Elite Wrestling: Fight Forever, developed by external studio Yokes and published by THQ Nordic. The game was released late in the quarter on June 29 and had a solid contribution in line with the management expectations in the first 2 days, despite a mixed receptions from critics. Other new releases included the System Shock remake on PC only so far, and MotoGP 23, which both had solid reception from both critics and users. Revenue from back catalog titles, which also include platform deals, amounted to 1.6 billion in the quarter, a 10% increase year-over-year. And here you can look at a lot of familiar IPs we publish. The top 10 titles of back catalog: Star Trek, Deep Rock Galactic, Borderlands, Neverwinter Night, Welcome to Bloxburg, one of the most popular game on Roblox, Chivalry 2, Risk of Rain 2, SnowRunner, Valheim, and Metro Exodus once again. Other revenue amounted to 800 million in the quarter, an increase by 67% year-over-year. This is mainly driven by growth in number of games under partnership agreement. The adjusted EBIT margin notably improved sequentially, but remains impacted by games development amortization, combined with the soft performance of the previous financial year's releases, impacting catalog revenue this year. New releases with better ROI at the start of the year provides a strong base for continued margin development improvement throughout the year. Worth highlighting, it's encouraging to see Crystal Dynamics Eidos turnaround to solid profitability is ahead of plan, driven by cost efficiency improvements, a stable back catalog business, and increased external funding for ongoing development. This is a testament to the commitment and focus of Crystal Dynamics Eidos management and is supportive for our larger PC console games business.
Tomb Raider, I'm just saying Tomb Raider. Crystal Dynamics, Eidos, Montreal, they make the Tomb Raider games.
Looking ahead into the pipeline, again, several additional large budget games are expected in this fiscal year 23-24. The release of Payday 3 was confirmed in January 2023.
Yeah, here I have to jump in. So, as a gamer, from a gamer's point of view, so Payday 3, cooperation with Starbreeze, so I definitely believe this can be a success. Alone in the Dark, I'm a bit more reluctant on this game. South Park definitely also is going to be some sort of success, and Outcast. This game, I think, is in development since an eternity, guys. Since an eternity. So I don't really believe in Outcast here. Hot Wheels Unleashed 2, turbocharged, so this will definitely be a success like the first one. Homeworld, that's a very special niche game. Teardown, I think, is not yet on consoles. Coming out on consoles will be a success there for sure. And then Space Marine 2, this is in my opinion, with Payday 3, those two are the most important games, therefore they put them first and last.
Quickly reached 1 million wishlist on Steam, which has up until early August reached 1.5 million. The game was revealed in Xbox E3 Showcase and one of the biggest third-party reveals. Payday has recently excited a successful closed beta, which was well received by the Payday community, driving a notable pre-order uplift. The full game will be released on September 21st. We also have other exciting titles, such as the recently announced South Park Snow Day coming in this fiscal year, and many other high-profile titles. In general, we believe we have a solid pipeline for the remainder of the year, even if something unknown to us today would drop out of the year. To ensure polishing and optimal release slots, we have confidence enough to deliver on our targets. Aside the titles you see on this slide, we still have more than 60 other products that will ship, according to my management, during this fiscal year. Looking on the return of investments, I'm happy to see an improved performance of new game releases in first quarter. Dead Island 2 and All Elite Wrestling had an ROI of around factor 2 to 3 in the release quarter alone, which should increase over time. Note that the wrestling game came out very late in the quarter. The weighted average ROI now stands at 241 as of end of the quarter, compared to 248 in the end of last quarter, and is still weighed down by soft releases in last fiscal year, and a short period of inclusion of the stronger Q1 releases. We are confident in an improved ROI throughout the year, driven by successful releases in Q1 and at the start of Q2, as well as our pipeline of upcoming releases. Looking at investments and the pipeline, the PC console game segment continues to make notable investments into the future. In total, 1.7 billion in the quarter, compared to 1.1 billion last year, were invested. The finalized value of the completed and released games during the quarter amounted to 800 million, compared to 545 million last year, driven this quarter by the release of Dead Island 2. In total, we had 215 ongoing game development projects as of end of June, of which 62 has been announced. Looking to mobile games, I'm pleased that the segment had a solid performance in profitability, which was ahead of our expectations. Even though organic growth was -12%, it's a notable sequential improvement compared to last quarter. The mobile game saw some headwind from lower ad prices year-over-year, impacted by platform changes related to privacy, a bit lower player engagement post-COVID, and macroeconomic factors. The negative growth is also a result of lower user acquisition investment in recent quarter as a response to new market circumstances, aimed to keep desired profitability levels. Underlying trends, though, have started to improve, including some positive trends with regards to monetization. Despite the sequential increase in user acquisition cost, profitability was strong and ahead of management expectations, with adjusted EBIT margin of 29%, driven by systematic investment to balance growth and profitability. The mobile business are expected to show positive organic growth for the full year and continue to add both earning and cash flow diversification. Looking into tabletop games, the sales amounted to 3.2 billion in the quarter, an increase of 20% compared to the same period last year, or by 9% organic growth and 7% pro forma in constant currency. Growth was driven by trading card games product category, with more contained growth for board games. From a geographical perspective, growth in Europe notably outperformed growth in the US. Adjusted EBIT amounted to 206 million, with adjusted EBIT margin of 6.5%. The result is in line with management expectation in one of the seasonally weakest quarter of the year. On a year-on-year basis, profitability was impacted by a product mix more geared towards trading card games, similar to in recent quarters. Operating costs also increased year-over-year due to inflation and the run rate impact of prior year's recruitments. In addition, in the comparative quarter last year, benefited from notable cost phasing into later quarters as a result of shift of activities during the initial integration phase after transaction of closing. These impacts are expected to moderate over the next quarters. While the first fiscal quarter is historically a period with significant inventory buildup in the preparation for the peak season, the inventory increase was around 400 million lower compared to Q1 last year. This resulted in a positive free cash flow for Asmodee in the quarter. The company is expected to convert about 100% of its adjusted EBIT into free cash flow in this fiscal year, with a positive contribution in the first half of the financial year compared to the cash consumption seen in first half last year. Also worth highlighting, Asmodee signed a new partnership with Palindrome, one of Embracer Studios, in operative group of Amplifier, to expand the Legends of the Five Rings universe in a video game. Asmodee also received 3 prestigious Spiel des Jahres awards at the recent ceremony in July. Looking into entertainment and services, we had a very strong quarter, growing 70% organically with 16% adjusted EBIT margin. The strong organic growth is primarily driven by Plaion partner publishing division, which had 2 notable releases from partners in the end of the quarter, contributing to the organic growth. The higher margin is primarily explained by a strong contribution from Middle-earth Enterprises, driven by strong licensing revenue for The Lord of the Rings. The performance of Middle-earth Enterprises is well ahead of the business plan developed at the time of acquisition a year ago. It's encouraging to see many exciting external projects based on this incredible IP, including the recently successfully released Magic the Gathering trading card game, The Lord of the Rings: Tales of Middle-earth, and the upcoming PC console survival crafting game, The Lord of the Rings: Return to Moria, as well as many other exciting new products that will grow that IP further. These 2 titles are examples of potential key drivers for Middle-earth Enterprises during this financial year. I would also like to highlight other businesses within the free mode vertical, such as Limited Run Games, that hosted a recent showcase announcing an exciting pipeline of classic games such as Jurassic Park Classic Games Collection, Clock Tower, and Gex Trilogy. Iconic IPs if you've been in this industry for many years. Also in the quarter, Dark Horse and Asmodee also signed an agreement for the release over the next 3 years of a range of collectibles, art prints, and comics based on Asmodee's
So the entertainment service and also the tabletop games, it's something that is part of the Embracer Group. I personally, I don't really care about those card games, but if we see growth there, it's definitely also worth to follow it.
Legends of the Five Rings and Arkham Horror IP. Soon, Johan, it's your turn. 1 slide more. So just to give you a bit of update on the market. I'm pleased to see important. There is a growth forecast again in this industry. The global games market is expected to generate $188 billion, which is an increase of 3% year over year. The growth will be driven by better console supply, a stronger new release lineup, and digital sales, among other factors. The longer-term growth prospects also remain strong, and total games market values are expected to reach $212 billion by 2026. The console market this year expected to see the strongest growth, with around 7% year over year. Also, the tabletop market was slightly down by around 1% year over year in the first quarter. Growth was driven by in Europe, growing 8%, while US market decreased. Growth in Europe was driven primarily by trading cards, which was up around 25% year over year, while board games market also grew slightly at 2% year over year. With that said, I would like to hand over to Johan.
Thank you, Lars.
All right, guys, I'm stopping it here, and I just want to also talk very quickly about this last market update, this last slide. So it's very, very important. This is very important, and this is also one of the major reasons I'm, for example, invested in the gaming industry and gaming companies. Since there is a growth can expect future growth, and even my friends, if some companies like CD Projekt, for example, so also has a similar chart like Embracer, or if we look here, for example, Ubisoft, also similar chart. So a lot of those European gaming companies, the chart looks terrible, but it's just some sort of consolidation right now, because we were in a gaming company bubble before, so we can definitely say this. So overall, the market is growing. Overall, the market is having a future, and I don't think that people are simply stop playing video games or spending less on video games. Microtransactions, DLCs, all of this exists, and people will continue to spend on this. All right, guys. So with that, I'm leaving it here. If you want to watch the rest of this video, also the Q&A is also pretty long, so I'm not going to show this now in this video. Then please also you find the link to the webcast by Embracer. So it's not me. I don't have any rights on this webcast. So all the responsibility is here on the Embracer group and on the people that are talking, of course. So I'm just a retail investor, YouTuber. This is for financial entertainment purposes only. So I want you to learn a little bit. I want you to have fun, and please make your own research. So with that, I'm leaving it here. See you next time. Bye bye.